Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start with Asian stocks. They remained in the downturn on Thursday hit by various factors, which includes a weaker finish on Wall Street overnight. Growth worries in Australia and jitters over tightening margin trading rules in China. We're looking at Japan's Nikkei 225 index, which reopens for its first trading session this week after being shuttered for the Golden Week holiday since Monday. It touched a one-week low. Looking also at Australian's S&P 200 index, it extends Wednesday's plunge as, of course, investors wait National Australia's Bank earnings released and, of course, concerns over whether the Reserve Bank of Australia is putting a stop to its easing cycle despite faltering economic growth. Also, moving to the US dollar, languished at its lowest in over 2 months against the basket of major currencies earlier on Thursday. Also under pressure from disappointing data, while of course further spike in German yields gave the euro some support. While we're at it, we're looking at the euro that it jumped to a 2-month high of 1.1371, continuing to pull away from a 12-year low of 1.0457. Also, yesterday's Federal Reserve Chair Janet Yellen's speech warned that low long-term U.S. interest rates could spike as the Fed normalizes its policy, causing disruption across the financial system. At a separate event, we're looking at Atlanta Federal Reserve Bank President Dennis Lockhart said market expectations for September interest rate hike were in reasonable alignment with the central bank, of course. Now, the euro also powered to a 3-month high against the sterling as Britons today vote in the most closely fought national elections in the generation. Also, it's an election that refuses to play by the rules. As the UK goes to the polls today, that what we can say with certainty is that the traditional two-party dominance of Britain politics since 1945 has been challenged by a range of insurgent parties. Whatever happens on Thursday, the UK's political landscape has altered for good. Gold in the commodity sector remained also under pressure on Thursday as higher bond yields dented the investment appeal of the metal, while of course uncertainty over the timing of a Federal Reserve rate hike remains. Bond yields in Europe and US have been rising as deflation fears have eased with recovering oil prices. In anticipation of a Federal Reserve interest rate hike later this year, bullion failed to get a boost from a softer dollar, which languished at its lowest in 2 months. Against, as we mentioned, a basket of major currencies on disappointing economic data. Weakness in the data and the dollar typically boosts safe haven bids for the bullion, but that failed to materialize yesterday. Investors are now focused on the critical US non-farm payrolls data on Friday for, of course, stronger clues about the economy and its impact on the timing of interest rate hike. Moving to crude oil, we're looking at prices are falling today after hitting 2015 highs in the previous session, as an OPEC delegate indicated that the group would stick to its strategy of pursuing market share rather than cutting output, and traders took profit from a multi-week high. Stronger than expected demand growth and, of course, slowdown in crude supplies has lifted oil prices about 50% from a 6-year low hit on January. Yet, many traders and investors are saying that global crude market remains well supplied. That's all for today. Please take a look at the economic calendar today. Also important events from US. However, tomorrow is the big day. Thanks a lot for being with us. See you next time. Bye-bye.